Hi everyone, and welcome to today's webinar. Sorry, I was waiting for David to start the recording, and in fact he had, so it's all my fault. Thank you so much for coming along today, and on a different day. I know we were supposed to be together yesterday, but it was my birthday, so I decided to have a day off. So thank you so much for being so understanding. As always, we have to start with the disclaimer, which I know you can see on your screen. As you know, this can be a very, very risky business, so please don't ever use money that you cannot afford to lose. And oh my goodness gracious me, haven't things been, how shall I say, I can't use the word exciting, but you know what I mean. So much going on, and dramatic, that's a good word, that's a much better word. And here we are, David and myself. We're going to be covering all sorts of things in this particular session because we want, there's a lot of stuff going on in the background. There's Brexit, we've had some very, very dramatic fundamental news. You've probably picked up off Forex Factory or the economic calendar to do with the flash PMI numbers for Germany and France, which have huge implications for what is likely to be going on in the markets moving forward. And of course, we've had the Fed, we've had the fallout, if you want, or the reaction to the Fed. We're going to be looking at the charts through the prism of volume price analysis, and we will also be looking at the charts together with the quantum trading indicators to see basically what are they telling us, and much more importantly, where we have some trading opportunities. The way we approach Forex trading, those I know we've got people in this room who have very kindly bought some of the books that are up on Amazon, the complete guide, the Forex for beginners, and also the three-dimensional approach to Forex trading. And that three-dimensional approach is technical analysis, but also looking at the fundamental and related markets. And really this session today is a perfect expression of that. Now, all this is background information. It's all stuff you have to know. It does take time. You're not going to be able to do it in one fell swoop. We've been at this for nearly 20 years now. And the one thing that David and I can honestly say and put our hands up is that we never, ever stop learning. The day we say we know it all, that is it. You might as well just pack up and go away and go and do something else. So before we move on, let me just pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. It's grey and miserable here in the UK, or it certainly is where we are at the moment at any rate, so I hope it's a bit nicer where you are. If this is the first time that you've joined us, a very warm welcome, and great to have you along, and welcome to a lot of our regular attendees who I can see in the chat box as well, so welcome to you too. We're always happy to answer questions. If you want to drop them in the chat box, happy to answer them there. If they're short questions, longer questions, we will answer on air for you. As Anna said, lots going on in the market, so I'm going to pass back to her. And we focus on NinjaTrader here. We might drop on to MT5 at some point, but generally speaking, we tend to focus on the NinjaTrader platform pretty much throughout. Anna's on Ninja 7. I'm on Ninja 8, and I think Anna's going to move over to Ninja 8 next week, so perhaps I'll go back to Ninja 7, so at least there's some variation. I'm passing back to her, and we will get going.
One of the very important elements that we have to understand as traders, well, all traders, but Forex traders, I would say in particular, and that is how all these markets are all interconnected. And this week, and certainly today, it's the big bad bond market, which is really starting to make some serious noises. And understanding bond yields, what they tell us now, and what they are implying for the future, is something that can give us that sort of the heads up of what is likely to happen on the currencies and currency pairs that we like to trade. This is actually the slide from the Forex trading program that David and I have put together. It's we call it relational analysis. As I said, we've got technical analysis, fundamental analysis. We are the only ones who've come up with this expression of relational analysis. It's really looking at related markets and how they interconnect, and how you really have to do what really is cross-market analysis. So we have to know what's going on in equities, bonds, as I said, extremely important, commodities, and right at the center is we have the Forex market. With regards to the indicators, we've got the full suite of NinjaTrader indicators that are also available, as David said, for MT4, MT5. We've also got some for TradingView, and we're going to be working on TradeStation as well. But the The four principal forex ones in the complete package are these: there's the currency strength indicator, the matrix, the array, and the heat map, and they all have an individual role and purpose. They are there to highlight potential setups, potential trades. They help to keep us in, and they, more importantly, they help to tell us when it's time to get out. And they all work in conjunction with volume price analysis. That is the base methodology, and everything is built around that. And today, in particular, at the moment, what has been happening, where we've had this huge move in the euro, which has been sold off very, very dramatically, as I said, as a result of the flash PMI data which came in. And I just want to bring up Forex Factory. Here we are. Just look at these numbers that we've had here. In the most important one, no disrespect to the French, is the German flash PMI number, which came in at 44.70. 50 is, if you like, the inflection point. Anything below 50 is not good. Above 50, it means the economy is, certainly the manufacturing side of the economy is doing very well. Now, why is this number so important, and how do we read it? Well, first of all, it's below 50, but much more important, and this is the same with all fundamental news, is you can read fundamental news as you do any chart. And Forex Factory have this neat little feature on the side of the release itself, which pops up a graph, and you can see here the manufacturing, the PMI manufacturing data from Germany has been falling, with only a couple of exceptions. Now, it's fallen below the 50. This one has fallen way, way below expectation at 48 and 44. Why is that so important? Well, first of all, it's important to the German economy because it is a huge part of exports. It's a massive, massive part of their economy. They are a surplus country. They're surplus like China, aren't they, David? And I'm not sure about Japan, but that's and cars are a big factor there. And we all know what's been going on with what Donald has been saying about European cars and German cars in particular. So you've got that. So when the market, takes a number like that into, a number like that comes in, they get very, very, very nervous. And also you have to remember, last week we had the ECB. The ECB are pretty much at the, there's not much more they can do to kind of stimulate demand. Where is this demand coming from? If your economy is based purely, so heavily dependent on exports, what are you going to do? And being such a huge part of the global economy, things are not looking very clever for Germany. So reading fundamental data, having a graph like this, most times, numbers come in as expected. You get some, you might get some a knee-jerk reaction, but today is more than just a knee-jerk reaction. It's really, after the Fed on Wednesday, slowing down, possibly not even in having any interest rate increases this year. And that news, although it's kind of pleased the markets, the equity markets, because the narrative goes, Fed eases, props up equity go up, dollar falls. That's a nice sort of, everyone understands that. But when the economic data itself is really, it's not looking very clever, even the equity market is going to suffer, which is where the bond market steps in. The bond market is the big bad, daddy of them all. It's really the most powerful market. It's been quite quiet, it's been pottering along, but expect to, to see some quite dramatic things in the bond market, as I said, in the next weeks and months. So that's how we look at fundamental data. And on top of that, we have also all the political aspects, not least the trade tariff discussions, wars, call it whatever you like. So how does that actually impact the actual charts themselves? Well, we're certainly going to have a look at the euro. I've actually got the euro yen because that's been the most one of the biggest movers. And the reason it's been the biggest mover is because it's got a yen in the pair, and the yen is also a proxy for risk. People are buying yen heavily because they are very, very worried about what is happening in the wider economy because the bond market has also spoken. Yields are falling. There's been an inversion on, I think, the 2 and 5. So all in all, it's not a happy end to the week. And if you may have noticed, I haven't even mentioned Brexit, because in some ways, Brexit has kind of, because it's been taken, so much centre stage. All this, as traders, we can kind of forget what is actually also going on in background. And we've also had some Canadian data, which I haven't actually had. Forex Factory hasn't, and we'll look at that, and we'll look at the CAD and see what's going on. I'm just going to pass over to David, because I've got a couple of other things to say to do with fundamental data, your currency pairs. We've got session crossovers. Can I just ask someone? Correct me if I'm wrong, but I think I'm right. You are actually all on summertime in the States, aren't they, David? Yeah. Yes. So in fact, I think the market, because that's actually quite important. Yeah, the market's open in half an hour. So we're not over in summertime yet. We're going to be not this weekend, the weekend after. So I'm just going to pass over to David, and want to say a couple of things, and then I want to look at the euro yen in particular.
Anna asked me if I was making notes. I must admit I haven't. But that, what she was saying there, really does encapsulate everything to do with trading, really, in however long it was, 90 seconds, couple of minutes. It really does pull it all together. And it's what we teach, what we talk about, understanding relationships, looking for relationships within the existing markets. We're looking for relationships in related markets, and really just pulling it all together. And it really does reinforce the chart there of the fundamental news. It really does reinforce the importance of the fundamental data. And I'm not saying that today's data was a given. It could have been a flash in the pan. It could have been some positive news came out, totally contra to what the expectation was. But generally, when you're looking at trends like that, it's a pretty strong signal that the market is, that's the way it's going. And in addition to that, it's not really just about one number. If you start reading all the fundamental data and put it into context and all the little pieces of news that come through during the month, it's pretty clear that, Europe as a bloc is in trouble. Some countries a lot more than others, certainly Italy and Spain. And I think it was only last month that technically Germany avoided being classified as a recession. So, you put all that together, and to be honest, 3 to 4 weeks of manufacturing output or whatever it may be is not going to put that right. It's clearly a much deeper problem. It's a deeper problem in the economy, in global demand, whatever it may be. So it's what we always say, that one piece of economic news, whilst the market may react to that, it's really how that fits into the pattern of the news per se, and that's why that chart is so important. So, for example, had we seen, let's say we'd seen better than the expected news, let's say it came in above 50 for whatever reason, that would then be seen against the context of the longer term trend. And let's just put it back up there again. So had there been a blip today, a blip positive in other words, nevertheless, the overall trend is very bearish if you look at it in chart perspectives. So whilst a positive number might have given the euro a little bit of a boost, it's a boost against what is a major downward trend. And therefore, the longer term trend is bearish, and you would expect that bearish momentum to pick up as the market moves south. And that's really what it's all about. It's reading this data. It's not only looking at one piece of fundamental news, as here with the flash manufacturing, but also putting that into context of all the other bits of news that come through for employment, housing, jobs, whatever it may be, and really just trying to get a feel for it. And it's not just about whether you're looking at this as a longer term opportunity or whether you're looking at it as an intraday opportunity. That's another discussion entirely. But it gives you context as to the state of that particular currency and that particular economy from a purely fundamental perspective, which you then, of course, overlay on the technical picture. of which volume, of course, is a major part. Just going to pass it back to Anna.
Thank you, darling. Thank you. It would help if I turned my microphone on, wouldn't it? Sorry about that. What I had said to myself was that what we also have to look at now is this is the 8-hour chart for the euro, and the reason I look at the 8-hour chart is because this market is really three sessions of 8 hours, and now we have New York joining in as well. We obviously had a volatility candle triggered on this huge down bar. This is on the release of that data. So we have other factors to consider moving forward today, and that is, first of all, obviously the news impacted the euro because it came out in the session, in the London and European session, and that also begs the question that as a forex trader, you kind of have to do research and have to understand your currency and currency pairs, what they represent in the markets, if they are a proxy for risk or not, what items of fundamental news are likely to move the pair. And that's quite easy to do because the fundamental news comes out on a regular basis. So you have to kind of do a little background research, the way you would do a stock, as it were. You wouldn't sort of move into a stock without knowing, where it is it a defensive stock, or is it a stock that is more for a risk on risk off type of market. So, and it's pretty much the same with the forex pairs. We all know we have to check out forex pairs in terms of their volatility. We've mentioned in the past the site, the investing.com site, where it actually has, if you type in investing.com forex volatility, it will bring up a page on the site which breaks down really clearly even the times of day, the days of the week that particular pairs are likely to be moving more. So you as a forex trader, you who want to have the best opportunity possible for a trade, that is part of your research that you will do on a pair. That's the sort of technical picture, but you also have the fundamental picture, and this is a perfect example today. So it's getting to know your currency and currency pair. So this is the euro yen. Now what's happened is we've obviously got New York coming, and we've had the crossover. We've got a new bunch of traders coming in. What do they're looking at this chart now, and they're thinking, oh, unless they're already in a euro pair, I'm in a euro pair. I'm short actually euro dollar. So today's been a great day for me. The decision I've got to make tonight is whether I close out or not, or keep it overnight, which it really probably isn't really a good idea. So as a US trader, you've now come on board. There have been these big moves in euro, across the euro complex, and if we actually pull up here, let's go to the 30-minute here. Let's have a look quickly, and let me just isolate the euro here as on the matrix. In fact, it's been jumping about since that big move. It's actually coming back slightly, which you would expect after such a dramatic move. Let's see. But when I looked at it earlier, here we are. They were when the move was developing. They were all pretty much at the bottom of the matrix. There was heavy selling of the euro, but it wasn't there's always a ranking of that selling. The heaviest, as I said, was in euro yen because it has the yen in as its counterparty, and it's also yen represents risk on, risk off in the broader markets. In fact, the euro dollar was down there, and we've got the euro pound because we've got Brexit as well. So you're now coming into a situation where there's been heavy selling of the euro, and the question is it likely to carry on in the session that we've got ahead, or in fact, are we going to have an about face, and in fact we should be looking for some kind of reversal trade? When you see these huge moves, it can be it can be quite scary, because you think, oh my goodness, we're not taking a reversal trade after such a dramatic move. You know, a lot of traders feel very nervous about this, but then they also feel nervous about joining, you know, if the market suddenly decides, yeah, the traders are going to carry on. So what do we, you know, what can we do? What do we do in this sort of situation? And here, this is where, if I can hold on a second, I'll just pull this chart. Now this is actually, and this is where levels come in. This is where levels of support and resistance come in, because you know, when markets rise very quickly, fall very quickly, they all come to some kind of pause point, and they will go into a congestion, and then the opportunity may or may not arise for a reversal or potentially a continuation of the move lower. Now this is the 3-minute chart. This is the Camarilla of the 3-minute chart. I use Camarilla, David uses Camarilla to give us, you know, some idea of these important levels. Now we can see here we've got 6 levels. We've already crashed through the S4. That's the key one. S4 and R4 are key in terms of breakaway, breakout. It crashed straight through, kind of paused at S5, got to the S6, crashed through there, retested it, and kind of is now what I call meandering down. Now we don't get any more than 6 levels, certainly on the charts up to the hour, but not including the hour. That's it. We're done for the day on these levels. So what are we going to do? So the thing is, we then have to go to the hourly chart to see how does the hourly chart you know, fit into it. And that's quite interesting, because on the hourly, it crashed through the S4, but as often happens when it goes through these key levels, it did actually try and it did retest. We've got a couple of doji candles here. We've got some congestion. Then we had a continuation of the downward trend. But look at the volume underneath these down candles. You can see, I mean, you know, it's not spectacular, certainly here. And now hasn't quite got to the S5. You know, which is the next key level. So as traders coming into this kind of scenario, if euro yen or euro dollar is one of your preferred pairs, you have to be a little bit patient and wait for the market to reveal the levels from which maybe a reversal trade, you know, will develop, or a level that in fact could be a potential for a re-entry, because the downwards trend is going to be, you know, is going to continue, or because it's Friday, the third option is that in fact it's just going to congest. You know, the market said, look, it's Friday, we've had enough, you know, that's it, it's done for the day, and there's nothing we can do about that. So we have to perhaps go and have a look at another pair, another currency that possibly could deliver, you know, a more meaningful, you know, trend, as it were. And in fact, on the CSI here, which is interesting, this is a 60. You've got them at these extremes. The pair that's at extremes, that's the yen, that's the euro. The euro looks as though it's turning up. Let's move down the time frame. Let's go to the 5-minute chart here. Let's have a look what's happening here. In fact, there's a little bit of a turn. Where are we? Yeah, it's turned over, then it's sort of, you know, tried again, and now it's turned over again. But look, what's really important is, in fact, for the yen, the euro and the yen on this time frame, they're moving in the same direction. So possibly, certainly on these faster time frames, when they move in the same direction, as we explained on Tuesday when we did the MT5, it's really telling us that certainly on the 5-minute chart, it ain't going anywhere for the time being. So with this yen selling off, what's it selling off against? Well, I would suggest that you possibly are you looking at the CAD yen, David? The CAD sold off after its fundamental news, and it looks like it's been bought in the market. It's also a currency that tends to come very much to the, you know, center stage in the North American session, as you would expect with the dollar, but the Canadian, because the Canadian traders are now in the game, as it were. So I'm going to keep an eye on euro yen to see if in fact we're going to get a continuation, or we're just going to congest. And I think, David, have you got Canadian, or have you got some other pair that you've got? Aussie dollar. Oh, David's got Aussie dollar, because you see here we've got a divergence on the Aussie dollar. The Aussie has been rising, and the dollar has been falling. So anyway, that's why we have a CSI as well, because The CSI gives us an instant graphical representation of what is happening on oil on all the charts. If they're moving in the same direction, they're going to be in congestion, and certainly on the faster time frame. What I said on Tuesday was, if you go to the slower time frames here, just wait till that updates. If you see two currencies moving in the same direction, I'm trying to find two that are moving together. Let's have a look at the CAD and the Aussie here. That is also telling you there is a congestion, a range-bound trading in this time frame. What you then could be looking at is, on the faster time frame, is those small divergences that you will get in the oscillation of the range that is actually being mapped out, if you like, in the slower time frame. So you could have some short-term swing trades on the faster time frames. That's what this indicator does. It is far more sophisticated than simply, oh, it's overbought and oversold. Fantastic though that might be, I hasten to add, it does actually work on different levels as well. So can I pass over to you while I wait for yeah, is that okay? Are you answering questions or something?
No, just
okay. I'll turn myself off.
Just going to switch screens for a moment. Bear with us. Anna's going to make her own notes. I'll stop scribbling. There we go. You should be seeing my screen coming up now. Now we're on NinjaTrader 8 and slightly different layout, but basically it's a multi-time frame layout. Top of the screen, I've got the 3-minute, the 5-minute, and the 10-minute, and down at the bottom here, I've got the 30-minute, the Renko in the middle, and over on the right-hand side, the daily chart. Sorry, just scratched my microphone, my mistake, apologies. Reason I switched to the Aussie dollar, just to get away from the euro and the reversal opportunities that will ultimately come, because looking at the CSI, where are we? Here we go. Looking at the CSI, clearly the euro is beaten down to a pulp on 15 minutes. Equally up at the top here, we've got the yen. But look at the amount of time that these currencies have been sat there. This is 9 o'clock UK time, so we're running in, it's now just coming up to 1:15. This is 1 o'clock here. So pretty much for the whole of the morning, that's where the euro's been. And pretty much for the whole of the morning, that's where the yen's been. So it is very much a question of being patient and waiting for those currencies to reverse. Reverse they will, but it's a question of not if, but when. And that when means you've got to be patient and wait for that to come along. It also means that when you're taking that opportunity, then you've got to set your stop loss that much wider to allow for all this oscillation and time element that is passing here. We're not dealing with options, I appreciate that, but certainly in terms of the buffering that goes on, this price action could be quite variable, could oscillate, could whipsaw, and you've got to allow for that because you're not in a trend, you're in a waiting phase of price action, and you therefore have to allow that stop loss to breathe. You've got to give it room to breathe. It's got to be much wider to allow for this oscillation that goes on constantly, and the same down here. This may dive deeper still, could go all the way down here. You don't know, could get down to this level again, could try to rally, fall again. All sorts of things could go on, but ultimately it will do this, it will rally. Now it may not necessarily rally at the same time, which again is another variable if you like. Ideally what you want to see is you want to see strong buying of the euro and strong selling of the yen happening simultaneously. Ultimately that may not happen. It may just be that you see strong selling of the yen, for example, and nothing much happens on the euro. Now that in itself may be enough to give you some momentum, because if one currency is driving very strongly, that will deliver a trend. It won't be the strongest trend, but it'll deliver a trend of sorts, which may well be enough to make money given off a reversal trade. So there's lots of variables. There's nothing perfect. There's nothing that works every single time, but what it does give you is a heads up as to where to look, where you've got to be patient. And if you're not particularly patient and you want to be trading, then you've got to hunt out other pairs. You've got to start hunting out the trends. We're on 15-minute here. If I drop down to 5, Just wait for that to load up. And it's quite curious because you think, well, you know, why am I looking at the Aussie dollar? Because on the 5-minute and 15-minute time horizon, we were actually seeing some strong buying in the Aussie. We're still seeing it. The dollar here, you can see, is starting to kick back up again. What was interesting on Anna's 60-minute CSI is if you're looking at that from a 60-minute perspective, the Aussie dollar will be doing nothing in that and the slower timeframes because the Aussie and the dollar were moving together. Now we have the same scenario setting up here on the 5-minute, probably not quite so much on the 15. Still got a little bit of a cross there. The Aussie is still rising. The dollar looks as though it's flatlining, moving into the middle. It may well kick up. But against the 60-minute, and if we go back to the charts, indeed, the one thing that from a, and I use this loosely, longer term perspective, is that when you look at the configuration on the daily chart, you know, this doesn't inspire me with great confidence in terms of taking a longer term bullish position. And by longer term, I'm talking really about anything more than, I don't know, 5-15 minute, let's say, because, you know, when you look at it, and I keep, you know, we talk about this in the education program, we talk about it here. Even if you're an intraday trader, you do need to have a perspective on what went on the daily chart, because it'll give you some sort of perspective and some sort of heads up as to what is likely to happen. You know, what is the volume and price action telling you on the daily chart vis-a-vis what may or may not happen in terms of you as an intraday trader. You can see it here. We've got very good volume yesterday. We've got a very weak candle, big wick to the upper body, very narrow body. You know, is that strength or weakness? It's weakness. You know, this is, and if you also look at the preceding, and indeed, I'll go back to the euro yen, I think it was, or the euro dollar, one on the other, I can't remember now, but the price action there on the daily, again, it was classic. You've got it here. Where you see these sorts of rallies, where it's really very weak. You know, this is not a rally that's rising strongly like this, punctuated with pullbacks and rising again. This is a rally that looks terribly fragile. And when you see something like this with lots of volume underneath, you think, yeah, fine, okay. You know, this isn't going very far. In addition to that, you've also got further confirming signals, really. You've got the volume point of control here, the dashed yellow line, which is the fulcrum. You can see the extent of volume that's sitting there. You can eyeball the amount of price action you've got to battle through there. You've got these very strong levels. This is a very strong level of resistance overhead. So you've got a lot of reasons that this market is looking weak, looking fragile. So if you're trading this on even on an intraday basis, slightly longer term than just an out-and-out scalp, you know, it really is probably a higher risk proposition. Of course, you'd be looking at what's going on in terms of the dollar index and putting that all together as well. The one thing I would say about this chart from an opportunistic perspective, if you will, is that if this market breaks to the downside, you've got probably might not be able to see it here, but there's a very strong level of support here. This is extremely strong. It's actually blue, but it's highlighted through something else down at this level. If the market actually breaches that, then look at what's below. Nothing. I mean, it's almost fresh air. You've got no volume to speak of. You've got nothing in the way of major price support to provide a platform or a bounce. So, you know, once you get through this level here, it's free fall time. Now, whether it gets there, it's debatable. We'll see. This may well come into play, this platform, and I suspect it probably will. It's very strong. So let me just head back there. So that was really just the rationale for looking at an intraday trade. This is 3-minute. You know, there's plenty of opportunity in here to make money, but it's against that backdrop of what the daily chart looks like. And when you start to overlay these other signals, you know, again, this is something else we talk about in the program. It's really going into congestion. We've got a pivot high, pivot low, pivot high. We're expecting a pivot low somewhere. This is defining the ceiling. This is defining the floor. We're trading around the volume point of control anyway. So you know, this market doesn't look as though it's going to go very far anyway. Up onto the 10-minute, what have we got? We've got a 2-bar reversal onto the volume point of control. You know, everything is screaming at you. Look, this is not you're not going to be sitting in this one for very long for the time being, unless something dramatic changes in terms of something in the US, some fundamental data that drives the US dollar, whatever it may be. Let me just flick this over to, I think it was, I can't remember if it was euro dollar or euro yen I was looking at. No, it's the euro yen. Let's just go euro yen. I just want to pick up the euro yen on the daily. Let's go there. I think it was this one. Yeah, here we go. Okay. Ignore everything else and just look at the price action. This phase of price action, and it was part of the rationale that Anna took when she was looking at, euro weakness and which pairs to choose, etc., etc. But when you look at a chart like this and you look at price action like this, this is what I call catenary price action. It's half a bridge. It's half of the arched bridge. The price action rallies, but the price spreads get narrower and narrower and narrower and narrower. You see this all the time. Again, it's a sure sign this is not a strong rally. This is weak. If you want to see a strong rally, sure, you're going to get these sorts of candles, but then you get a nice big up one, there may be a little bit of a pullback, then another effort to rally, and so on and so forth. You've all seen them. But when you see this sort of price action, this catenary price action, it's almost parabolic, if you will. There's no guarantee it's going to do this, but this is driven by fundamental, but at the very least, it's not looking strong. You wouldn't be looking to take a longer term long position on that. You're looking at that as a short position for some period, because the other aspect to it is also we never actually got outside the trigger of the daily candle. That was triggered by Draghi. Market reverse back inside the spread of the candle. So nice opportunity if you're brave enough. And that's what it comes down to today. It's whether you're brave enough to step in and buy when what you're seeing is very heavy selling. And of course, that is down to the confidence that volume price analysis will give you once you start to see maybe a congestion phase building, some buffering, some accumulation going on, buying, a diminishing of selling pressure, in other words, falling volume under the down candles in an area where you've seen high volume before, etc., etc. You put that all together and you get in at the start of a trend, and you're rewarded because you are in at the start. And that's the payoff. You get in early, you're rewarded for it. You've been brave, you are rewarded by the market for being brave. Jumping in a trend is fine, but you're not going to take all the trend. You're going to take the middle third maybe. And you're not rewarded so heavily because you haven't taken so much risk as someone who's jumped in early. But I just wanted to show you that because it is a classic piece of price action. If you look out for that in rallies, if you see that, it's almost certainly weakness ahead. Nothing more, nothing less. Just looking at what's going on here, let's just go a step down onto the 30. We traded in here for a while, now we're carrying on down. Lower still to go by the look of it. Let's just have a look at see what's going on in the euro dollar. Again, pretty much the same. Let's have a look at the 5-minute, trading around the volume point of control. Lots of resistance in overhead. This very, let's just pull that up a little bit, maybe make it a bit clearer. There we go. These two levels here are on the accumulation distribution, but then they work on price. It's exactly the same as on MT4 and MT5. They are price-based levels which are calculated according to the number of times they have been tested either from above or below, and therefore the more times they're tested, the stronger they become. And these, I can assure you, are very, very strong levels. To get back through there will require real effort. In addition to that, below here we've got the volume point of control, which is just denoting where the major volume is in this region. And as we move lower, one of the key benefits of the volume point of control is simply, let's just pull that back a bit, there we go, back to where we were. It's really about anticipation, because if the market breaks the downside below here, certainly on this 5-minute time frame, very light volume below, very little in the way of what could act as price support for a market move. And therefore, if it does get through here, it should go through that region pretty swiftly, because there's very little in the way of volume to provide anything to obstruct its journey. Just go up onto the daily. There we go. In terms of potential support for euro dollar, we've got some here, But then as we get through that region, again, we've got very light volume as we work our way down. So, if there is a move through here, you would expect the price action to slice through here relatively quickly on decent volume. Let's go back to the CSI. I've got the currency matrix attached here as well. I think I've got the pound isolated out. Let's put them all back on for a moment. There we go. Let's just isolate out the euro. There we are. That's on 15. I suspect the euro yen was down at the bottom. It's now starting to claw its way back a little, but hardly dramatically. And the most beaten down is the Canadian yen. So if we go back over onto the workspace, put the CAD yen on to see where that one's heading. And that's been driven by fundamental as well. Sorry, a little bit sluggish today. There we go. Huge volatility on the news here. We're trading around the VPOC there as well, and that's on the longer term. Been pretty bearish. That's the volatility on the news. Can't really infer too much from that. It's a long-legged kind of doji candle. Lots of volatility. Expect further volatility to follow, and it's just a question of being patient and waiting for it to break. But there's rising volume. You can see the volume here starting to rise. We're getting into, this is the US session, just coming out of the UK session. We've got rising volume all the time, and the trend monitor is very bearish as well. So, it doesn't look terribly good for the CAD yen at the moment. Maybe that might get a boost from oil, you never know, or vice versa. Let me just pass back to Anna at that point.
Back on the 3-minute chart of the euro yen, and what's interesting, as we can see here, this is got a little hammer candle under here with a reasonable amount of volume, but just moving back here where we had some buying. We had the bounce off this level, which is about 124.40, which is pretty close to the S5 over here on the Camarilla. These levels. You have to sort of be a little bit flexible with them. Our indicators, certainly on the accumulation and distribution, are actually pinpoint in the sense that the number of times a price has either hit support or hit resistance. But when you're sort of trying to put them together over multiple here, this was the bounce off the off 120, about 124.40. It had a little run up. It really ran out of steam on this candle here. It actually triggered a pivot as well. Then we've got the downward trend, but this is where we've got some buying at the moment. Not a huge amount of buying, but enough certainly to push it up this level. But what levels are doing, this is what I said earlier, you have to sort of find the levels that, if they break one way or another, then you could potentially get the resumption of whatever trend has come before. And in terms of where it's likely to be heading, and what's interesting is we've got 124.50 here, but it's also at the VPOC actually, the pound yen. And as David mentioned, very similar price action on the pound yen that we saw on the euro dollar, where we had this not quite as pronounced as on the euro dollar, but you see weakness all the time. When you have candles with wicks to the tops of the candles, that is weakness. Then we had this really sort of little shooting star on this candle here. It also would have had the pivot triggered. Okay, we've got a wick to the bottom, so on a day trading basis, that would have certainly provided some moves to the upside. But what that candle is also telling us, there's 3 sessions in this candle. So that last session there is actually the New York session, which is what I'm saying. So it had been falling quite happily until New York, and certainly till the end of the, coming to the end of the trading day, and then the buying came in on the euro for for whatever reason. So although it's a daily candle, and although it is, now we can look back and say there was weakness within that candle, you also have to tease out what was happening in the individual session, be it London, Europe, New York, and obviously Asia, which is why it's good to have a look at the 8-hour chart. Now, on the daily, what we have here, we've obviously got the low at about 124.50. It's at 124.63. This could, I mean, we're only talking another, 50 pips or so, David, yeah, down to 124. We have a very, very strong platform of support. 50 pips for this pair is not, an unreasonable number of pips to take out in a session. It really is going to depend later on how equities are going to perform. The potential, the downwards potential, if you like, for this pair, there's nothing to say, it couldn't go certainly pretty close to just over, that's 124, I would say 124.10, David, about 124.10, 124.10, 120, that's potential 40 pips, but it is going to depend on whether, I think more for sentiment actually, whether not so much that there's going to be euro selling, but it's really whether we're going to see some buying in the yen because of how the market is going to react to overall sentiment. This is the yen index. Obviously, as the euro fell, the yen was being bought, and this is what we're seeing at the moment. It's now going in the opposite direction. We're actually seeing the little bit of buying that's coming into this pair, reflected here on the Renko. And when you are in one of these situations and it's really, you don't know what's going to happen because it's, other factors that are going to be influencing the price action, not least sentiment, and you're looking for, a solid reversal. We had a sort of a faint reversal here that we saw on the time chart as well. It really ran out of steam. This is when the advantages of using a non-time based chart, particularly in these tricky situations, because this takes out all the noise, if you like, that you see on the time charts. And here, the way we've developed the Renko, this is 3 Renko, so it's actually every time 3 pips go through the market, one of these bricks will post, but it's actually it's the value for the 1 minute chart, so it's a fairly it's a fairly fast chart. And what we're waiting to see is we want to see some solid green bricks. We want to see the trend dots solid blue at the bottom, and we also want to see the trend monitor transition to a solid blue. It did transition to a solid blue, but it didn't go very far before the downwards trend was resumed. But this is becoming quite an important platform of support, and we know it's important because it's very close to the S5 on the hourly chart. So we have all the information we need in terms of support and resistance. Now we need to see volume coming in underneath the up candles. What this is also telling us, well, where is this heading to? Well, if it gets through up to this low volume node here, what the VPOC also tells us, as well as giving us the fulcrum for the chart, where you have low volume nodes, you have an expectation that when the price gets there, it's going to have some momentum behind it, which is what you want. You want to get through there with a little bit of speed. Then you've got the support and resistance lines from the accumulation and distribution indicator here at 120. That's at 120. I say 124.76. Let's have a look. How does that correspond with the? Let's see if it goes anywhere near back to where we were on the Camarilla. Let's have a look at this 3-minute one. I think we're so far away from. Oh, we're miles away on that one. Let's have a look on the hourly. That's the ones on the levels on the hourly chart stay here all week, by the way. So next week there'll be fresh levels. That's got some way. That's got a little bit of way to go there. So we're going to have to look to the levels from the accumulation and distribution indicator that we have on our chart. And of course, we'll have a look at what's happening on the CSI. We'll have a look at the matrix. See what's happening with the euro pairs. In fact, the euro New Zealand was down at the bottom. That's moved up. Euro yen seems to have gone all the way back down. Where's the euro yen? That's so. Oh, it's actually in this time frame of the euro pairs. It's the one that's moving up quite nicely. I'm just going to have a quick look at the what does the investing say? The indices sort of settled down a little bit.
Just got them here, actually.
Right. Then we've got the yen index here. You know,
they've opened up. They've opened up a little bit.
Right, and what's also important here, we had this volatility candle on the session. This is the 8-hour session, and as often happens, or more than often, as it nearly always happens, is the price will certainly retreat to within the spread of the candle, and again we have the levels that if it's going to carry on, you have a break of the low of that candle. But at the moment, it's retreating in there. Could go sideways for a little bit longer while the market decides whether, as I said, certainly with euro yen, is it going to be risk on and risk off. And in fact, what's interesting is the VPOC has now moved down to the where the price action is at present, and that tells us certainly we can expect a degree of congestion, but it will also provide some decent support if this is going to go higher. It's not really terribly encouraging at the moment because you've had this up candle here with volume was okay. You have more volume under there, but look at the candle. You've got a wick to the top and a narrow body. That's not really very encouraging. We don't really want to see that. So maybe euro yen, you think if that's not you just patience and just see what happens on the Renko. Yeah, it's sort of struggling here a little bit as well. So there's no momentum in this pair at the moment. David, anything you want to add to that?
No, just checking out the indices.
Sorry, I'll turn myself on. As David's just checking out, I mentioned earlier about the bond market, and I really must introduce you to this, my new best friend, my new best bond trader friend that I've discovered on FX Street. I really sort of stumbled across him. His name's Chuck Butler, and he's a really, in my opinion, a very cool character, and he writes a really good roundup for FX Street, well worth reading, and as I said, writes in a very, very easy to understand way. What's very interesting is that he's been around the markets for 45 years, goodness, even longer than David and I, and he's an ex-bond trader. And as he says, I've been around since 1973, 45 years, most bond traders aren't even 45 years old. So I think he knows what he's talking about. And it's really, really important, as I said, this understanding the relationships between these markets to give you a heads up on what is likely to be happening on the currencies and currency pairs. So as I said, it does seem very confusing. It can be too much to take in. People say, oh, can't you just tell me to get in here and tell me to get out there? And on one level, it does work. Yes, you can say, well, there's a shooting star, there's a hammer candle, great, just do that if you just want it on this one simple level. But it's a little bit more complex than that. You have to appreciate the different sessions. You have to appreciate how the fundamental news will impact. You have to understand that these markets are interconnected, and it's not something that you're going to learn overnight. It's not something that you can. How can you fast track your knowledge, if you like? Well, you read people like Chuck Butler, because he explains it, and it suddenly, it all begins to make sense. I hope you read volume price analysis. At least it will, teach you how to read a chart, take the emotion out of the price action that you see on the chart. I hope you will think of investing in some of our indicators. Start with the volatility indicator. If volatility is going to be triggered on the chart, what is going to happen next? Because as traders, that's what we want to know. What is going to happen next all the time, particularly if you are in a trade. And finally, if you like, putting it all together, I believe David and I have put together this, this very comprehensive course. It's self-directed. It's there for you. It's for life. You have access to it. You can take your time. They've asked us how long does it take. You get all the indicators, and you get all the information you need, the knowledge you need to be able to trade these markets. If you were going to do it every day, a couple of hours a day, then I would think it would take you what, 3 months, David, 3 or 4 months to get through all the material. But hey, it's there. There's no rush. It's like an elephant. How do you eat an elephant? You eat it a little bit at a time. And I must tell you, this made me laugh so much. I had an email from someone who was interested in the program. It doesn't include personal mentoring, but this person was interested in the program and asked about, whether the personal mentoring. But before he was considering the personal mentoring, he needed to know how old I was, because he wanted to make sure that there weren't going to be any compatibility issues. It just made me laugh, especially after my birthday. Oh dear, it made me chuckle. I don't think he's one for our program, because the whole thrust of the program is that you become an independent, free-thinking trader. We don't tell you what to think. We tell you how to think, because at the end of the day, that is the only way you are going to be successful in this game. David, is there anything you want to say?
There's nothing I can. There's nothing I can think to add to that. But it is very true. It's people often write to us and they ask for our trading results and all the rest of it, which is fine. We haven't got a problem with that. The point is that, excuse the pun, they're utterly pointless, because they are particular to us and what we do. They are particular to our approach. They are particular to a myriad of time frames, pretty much every single pair. That may not be you. So what is the point in anybody showing you their results? They're meaningless for you, because they may not work for you, because you have a different profile, you have a different attitude to risk, you trade different markets, or you trade only a few markets, or you trade them on a different time frame, whatever it is, blah, blah, blah. So, that's what we do, that's what we believe. But what we give you in the program are all the essential tools, and perhaps more importantly, an understanding of yourself. Because if you understand yourself, and warts and all, that is what you need to really get a grip on to take you forward. Because it's hopeless trying to match, I was going to say, even a job. If you're not suited to a job, you're not going to be able to do it. You need to play to your strengths, but you need to understand your weaknesses at the same time. And if you understand your weaknesses and can play to your strengths, and the same applies in trading, then you tailor whatever it is you do to your strengths, whilst accepting the fact we've all got weaknesses. We all have them. We all know what they are. And what we try and do is get you to understand yourself first in the psychology module, and understand why perhaps you are drawn to certain types of trading and not others. And that will help you then to crystallize your own approach to trading, which will give you the best opportunity for success. And that's why showing someone else's results is utterly meaningless. Pass back to Anna, and I'll say cheerio bye, and we'll see you a little bit later if you're coming along to the second one.
Yes, all I would add to that is asking, saying, well, these are my results. I'll say, fine, okay, but how did I gain those results? Well, they are a reflection of my primarily, really, okay, my understanding of the charts, and certainly we can teach that, and you can understand volume price analysis, but ultimately you are going to have to take the trade. And that's going to be down to, when you see a chart setup, some chart setups are going to be riskier than others from a trade perspective. Do you have the personality? Are you comfortable taking those trades? So my results not only reflect my, my interpretation of the charts, which is fairly sort of straightforward, but they also reflect my own personality. I know I can take much riskier trades than most traders. So I can't say to someone, trying to match. So someone saying to me, I want to do what you do. I would say, well, okay, what's your personality type? Are you, where do you score on neuroticism? Not neuroticism. If you have very low score on your low neuroticism, it means you're fairly chilled back and relaxed. But sometimes that means I take perhaps trades that are riskier than perhaps another trader would see. There's so many factors involved, and I think it's very disingenuous for people to come to this market and say to traders, come to me, I can teach you a strategy that works in all markets. So right, there is one strategy for all market conditions, which is utter rubbish. There is, come to me, I'll teach you a strategy for all personality types. Utter rubbish. What the way we've designed the program, as David has said, is first of all, if you understand your strengths and weaknesses, they are just that, strengths and weaknesses. And as David says, you play to them. You understand that. You understand the charts through the prism of volume price analysis. You understand how the fundamentals work, the related markets work. And finally, we offer you these, as I said, we include these, we think, these amazing indicators that, we get such fantastic feedback from people. You put it all together, and that, we believe, will give you a fighting chart. Plus, we tell you how to think, how to interpret what you see. We don't tell you what to think. We don't say to you, this is it. You blindly apply one strategy, one tactic to all the markets, and it's clearly a ridiculous, way to approach. I have to say, sometimes it will work. Of course, it's not, what is it? Things will work at least once or maybe twice, but if you're doing it blindly and you don't understand what you're doing, you're not going to get very far. Anyway, enough from me. As I said, it's enough of our ranting and soapbox grandstanding. The indicators, you can find details at quantumtrading.com. You can see them, MT45, NinjaTrader, and now TradingView, and we're going to be doing TradeStation as well. You can buy one, or you can buy a small bundle, or you can buy the full package. If you buy the full package, you will get all free indicators, all new indicators added to the package. In fact, the next one that we have done is actually the pound index, which is in its final testing. And if you have the full package, it will be added to your package for free. So that's it. You never pay us any more money. And if you want an indicator to start with, I would say the volatility, because that tells you what is going to happen next, which is something that 99% of traders have absolutely no idea about when they look at a chart. And certainly, if you want to move up, something like the CSI, because as I said, it not only gives you entries and then potential entries and exits, it really does. It's a much more subtle indicator than simply overbought or oversold. With regard to the program, here it is. This is the quantum trading education. These are the modules. Everything is covered by our 7-day money-back guarantee, whether it's an individual indicator or the full packages. David, anything else you want to say to that? We're going to run, because we are back later. We are going to look at the indices. Is anything happening on the indices, David, or is it going to be a quiet close to the day, close to the week? Which is really why we don't really like doing Fridays very much, because you can get a lot of last minute, certainly around, or forex around the London fix and the close of the market. They're a bit down at the moment. No, nothing. No one is. Nothing is terribly happy at the moment. So anyway, if you're coming along to that, great. We will see you then. Otherwise, we are back on Tuesday for the London session at 8:30 London time. Enjoy the rest of the trading day. Have a great weekend, and we will catch you next week. Bye.